Welcome back. Today we've got a source on the EVAA protocol, and honestly, it presents one of the starkest contradictions we've seen in a while. We're looking at a project, EVAA, with some really impressive backing, big growth numbers, but the source itself flat out asks, legit or scam?
Yeah, it's quite the setup.
So the basics. EVAA is pitched as this DeFi superlayer. The idea is simple lending built on the TON network, and you can access it straight through Telegram.
Making DeFi easy, right? That's the promise.
Supposedly user-friendly,
Yeah.
but, simplicity in DeFi often hides, well, complexity and risk.
Exactly. And that's our job today, right? Not just to list off the stats, but to kind of synthesize what this hype actually means.
Yeah.
How can a project growing this fast on a major chain spark both, like 10x return dreams and these explicit warnings about it maybe being fake?
Okay, let's unpack this then, the core numbers from the review. There's something else. We're talking $118 million in total deposits. That's significant.
Huge. And 300,000 unique wallets interacting. That's a lot of users jumping in.
Plus transaction volume hitting up to 14.1 billion reported. I mean, these numbers are designed to impress.
They definitely are. And it's running on well-known assets, too. USDT, USD, and TON. So, not some obscure tokens nobody's heard of.
Right. Familiar ground.
And the EVAA token itself,
Yeah.
built for scarcity. The source states total supply and max supply are both locked at just 15 million tokens.
15 million. That's really tight. Scarcity plus utility is at the angle?
Yeah.
What does the token actually do according to the source?
Well, the source points towards holding EVAA for staking rewards mainly.
Right.
And down the line, protocol governance. So that makes sense, right? People buy into that limited supply, hoping for influence, passive income.
Which feeds right into those high expectations we see.
Yeah, and what's really fascinating is how the source links these metrics to, institutional credibility. It mentions collaborators like Polymorph Capitals, Myoth, CMT Digital, and Anima.
Okay, some recognizable names there. CMT Digital especially.
Right. CMT Digital, known for serious crypto trading and investment. Seeing their name connects that rapid retail growth to at least perceived institutional confidence.
Yeah, that adds a layer.
Yeah.
But here's where it gets really interesting, or maybe confusing. The community vibe is apparently super optimistic. The source cites 87% bullish sentiment. People dreaming of 10x returns.
And buzzing about a listing on Binance Alpha, which sounds like they're expecting a major exchange listing soon, potentially boosting liquidity.
That's the peak hype, right? Big numbers, big names, big expectations.
It really is. But then, bam, we have to hit the brakes and look at the source's own warnings. Despite all the praise, all the connections, the reviewer just flips the script.
How's that?
They explicitly say, do your own research before investing. And the commentary doesn't just hint at risk. It goes right there mentioning the possibility of it being a scam.
Wow. That's not subtle. It's more than just the usual not financial advice disclaimer.
Much more. It's like they build this picture of massive potential, deposits, partners.
And then immediately undercut it with a warning that it could all be illegitimate. That's quite the hedge.
Precisely. And maybe that contradiction is the actual story here. It reflects the high-risk nature of DeFi. Sometimes these institutional links are very early-stage VC plays. High risk, high reward.
So the big names add prestige, but they don't actually guarantee safety or success.
Not at all. Which is likely why the source includes that stark scam possibility right alongside the hype. It's covering the bases.
Okay, so to pull this together for you, the listener, EVAA Protocol comes across in this source as this high-growth, potentially high-reward project. Low token supply, clear institutional links, albeit maybe early ones. But, and it's a big but, this positive picture is served up with really strong financial warnings and explicit mentions of potential illegitimacy right from the same source.
Exactly. So what does this all mean for you when you're looking at projects like this? When a source gives you both these really ambitious growth signals, these big institutional names, and warns you it might be a scam, well, here's something to think about. How do you figure out if those institutional names are a genuine sign of due diligence or if they're just part of a very polished marketing strategy designed to obscure massive underlying risk? That's the critical question.